So now that we've gone over how to calculate risk and how to demo trade, now is time for live trading. This is when it really matters. This is when you're making real losses or real gains. So no pressure, but this is when we're putting everything we've learned together and we're actually entering real trades with real capital on the line. So when should we be live trading? Like I've said, if you're new, it's once you've learned the strategy fully, you've understood it, and then you've demo traded for a little bit, and you've got used to the user interface, entering trades, exiting trades, calculating risk, and using the strategy. That's when you're ready to live trade. And just for a start, just for your first couple trades, because it can be quite daunting and new, just do some little 0.5% trades on a smaller account, just to wean yourself into it. So this could be, for example, just a 0.5% on a £100 account. Just get used to that feeling of entering trades with real money, even if it is a little bit, because it obviously demo trading gives you that false sense. So as soon as you get on the live charts, it might be a shock to your system that you're trading real money that could have been bought, that you could have bought something with, something physical and tangible. There are two ways to live trade, and they are with personal funds / someone else has given you funds / given funds, or prop firm. And there's some big differences between these two in the way they work, but I'll go over that in a minute. I just want to, because this is one of the last videos in psychology, so I sort of want to put everything together into another step by step. So I know I'm doing this a lot, but it's just so we're keeping track, because I know I go through these things quickly, so I like to just do a 1, 2, 3 step by step of what we're looking at. Putting everything together for the 6th time. Let's do it. So obviously we're going through the software, beginner and strategy videos until you've fully understood it. Obviously, I keep going over this, so that means it's important, and it definitely is. So do it. The more I repeat things, the more important they are. So if I'm repeating things, that's because they're important and I want you to fucking do them. So go through those bits. Go through the strat and get used to it. Use it on demo trading. Go back through course content and identify areas you struggle with. Watch those videos and repeat them until you understand it. I don't want you even starting to demo trade or live trade until you've fully understood everything. Backtest for a little bit. This isn't something I've mentioned much yet. We don't really recommend backtesting much. It's just for the first few times using the strategy is when you would backtest. And it's actually a step before demo trading. So before you even start demo trading, it's a way of getting used to marking up the charts and actually seeing price move and see if it respects the strategy in the past. Luca sort of goes over how to use the playback function on TradingView. So I'll link that video in the description. But that's backtesting. Don't use it much because it doesn't even use MT4 or MT5. So you don't get used to the software. You don't get used to the psychology or anything. And you'll often see the strategy does work, but when you're backtesting, it's obviously past price action. It's already happened. It doesn't even matter. So it's just getting used to marking up the charts and gaining confidence in using the indicators and just gaining the confidence that it actually works, because you'll see it tends to work, especially because psychology isn't involved when you're backtesting, because it's pretty chill. There's no money on the line, so you're not even worried about anything. And then it's time to demo. So getting used to MT4 and MT5. Same things as when you're backtesting, but except now you're using MT4 and MT5, the actual software that you'll be using whilst you're live trading. And then once you've done that for a bit and you're used to the UI, you are going to start live trading. And this is where I want to talk about the two different ways of live trading. So number one is actual funds. So this can be your own, like from your salary, maybe someone's given you funds and they're sort of trusting in you to make a profit. And actual funds is the hardest way of trading in terms of psychology, because it's your money, your own personal money, or someone else's money on the line, and it puts a lot of pressure on you. So what I'm hoping is these videos have all sort of taught you the sort of ways to deal with poor psychology and all that. The main thing about this is you want to separate these things from the charts. Separate the money and where it comes from the charts, because it's irrelevant. It's irrelevant how much you have. It's irrelevant where it came from. Whether your cousin gave you the money, whether you put your own percentage of your salary into it, it doesn't matter. The markets don't know that. The markets don't care. So it's just about sticking to that trading plan and having confidence in it over the long term that it will give you profitable returns. And that's pretty much trading summarized. But I just wanted to butt in quickly because I forgot to mention how to actually open live accounts. So you open them through something called brokers, and there are two different types of brokers that are regulated and unregulated. So regulated are licensed, and therefore when you put your money in there, it's safe. They can't just run away with your money, and you can sort of use it as another bank, but that's just like something you can use it as. I wouldn't recommend you to use it like that, but your money's safe there as if it was in a bank. The downside to this is though, you can't use much leverage, and leverage is sort of a way of trading more money than you actually have. So it's not really something you want to do anyway, but I know some people like to take advantage of high leverage accounts, but that is what the unregulated accounts are for. So when you have unregulated accounts, they're not licensed. So technically, especially if they're not well known and have a good reputation, they could technically just run away with your money or not pay you if you won. So, but obviously they give you options for high leverage, and pretty much all of them allow you to trade gold. Not all of the regulated accounts allow you to trade gold. So there are some downsides, upsides to regulated and unregulated. It depends on how you trade and if you want to take advantage of leverage and trading gold. So I just want to go over a quick example of each. So for example, regulated, you've got Oanda, and there's lots more like IC markets, stuff like that. And then unregulated, I don't really want to recommend any because I don't recommend using unregulated. You can Google it if you want, but yeah, that's it. Just have a look at different brokers. I recommend making sure they're regulated, especially for regulated in where you live. So if you're in the UK, they want to be a UK regulated broker. So that's it. I just wanted to butt in quickly because I forgot to mention that. So I'll pass it back to that dickhead. Prop firms, because prop firms are amazing, especially if you don't have the capital. But there are some drawdowns to it as well. But first, I just want to go over what a prop firm actually is. So prop firms, there's lots of different prop firms. Let's say, for example, FTMO is a popular, trustworthy prop firm. What they do is they allow you to buy challenge accounts. They're called challenge accounts. And for example, they could be normally around 5 or 10k is as cheap as they get. 10k account normally costs around £100. And that 10k is not real money until you pass. So let me explain that quickly. You've spent that 100 quid on a challenge account, and what it normally is a 2-phase, or it can be a 1-phase challenge. The typical sort of rules are, first phase, you have to make 10% without going into more than 5% drawdown. like in any like single trade, and without going in, you can't go any more than 10% overall drawdown. So your account can't be under 10% of what it originally was at all in any given time. And then the second phase is normally a bit smaller of a target. It's normally a 5% target. So you have to make that 10% without breaking these rules. And then you go on to phase 2. You need to get another 5% without breaking these rules again. So you can sort of see how it's challenging, and it plays with your psychology a bit, because obviously first phase 10%, and let's say you passed, you see the second phase is only 5%, so you're like, oh fuck, that's easy, let me just do everything I did again. But then you get overly confident and you fail that second phase. In this school community, we go over how to pass funded accounts, so look out for that video if that's something that's interesting to you. But once you've, say, passed both those phases, you actually have a real £10,000 trading account. And there's still rules to it. For example, these rules still apply. So if you go into that amount of drawdown in a single trade or a single day, or that one in however long, at any given time, you can't go under 10% drawdown, then you fail the account, you lose it completely, no questions asked, and you don't get it back. And actually, they'll be out of pocket. The prop firm will be out of pocket. You won't be paying for those losses. And that's why these prop firms actually profit off of you failing, because the only money they get is the money you pay for the prop firms and the money you make on top of, like, once you've got the actual accounts. So they actually profit off of more people losing than winning. And they also, Luca goes over this in his course videos, but they also A-book and B-book. So they A-book and B-book traders, where if you're on a B-book, it means you're a shit trader basically. And what they do is they do the opposite of your trades. And that actually ends up, because it's so peak, but because you're so shit at trading, they do the opposite of the trade, and then they make profit because they did exactly the opposite of what you're doing, which is crazy. And then A-book is when they realize you're doing really good, so they just copy trades. They copy those good trades. And so this is a great way if you don't have enough capital. A big drawdown though, similar to demo, is it's not real money. And even when you've passed those 2 challenges and it is real money, you're not as attached to it because it's a big, like, company's money. Like, you don't feel like it's your cousin's money or your money from your salary. It's a massive company's money, so you don't really feel bad losing the money, if you know what I mean. So it's not real money until you pass, and then once you pass, it's not got much meaning to you anyway. So those are 2 ways of actually live trading. Luca goes more in depth about this, so that's why this video isn't super long, or I'm not hopping on the charts and showing you what to do, because Luca goes over that. But it's just telling you sort of when you're ready for live trading and the different ways to do it. So yeah, that's it for this one. In the next video, I want to go over how to make a trading plan, like using your own personal, it's just your own personal trading plan, using everything we've gone over, but it's about making it yours. So I'll ask you a few questions and you can just write your own trading plan from that. So that's it for this video. I'll see you in that video, and that'll be the last one. So you boys are fucking smashing it. Well done. I'll see you in the next one. Have a lovely day.